presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. Getting back to some normalcy as far as 5-day weeks are concerned. Let's take a look right now. We got all this wind coming in for St. Pete. It's actually been quite cold here, which has been lovely, but I'm getting phenomenal allergy attacks. And as I get older, I don't think it gets better, apparently. You had the SPY off about, kind of sideways right now, at least currently. You're off about 0.02%. In the SPY, trading at 580. So, you know, we were testing a little bit earlier that gap up of around, give me one moment here, around November 6th. See if we can reject that for today and potentially move a little bit higher. But I don't see necessarily any catalyst for that right now. Probably, if anything, you get just some form of consolidation around these levels. Of course, we are going to have Steve Rhodes on today, and he's going to share with us some of his analysis. He, of course, is the author of Mastering Probability. He is the host of The Trader's Edge on at 11 a.m. Eastern Time right here on TFNN. We got the composite off about 0.69% at 19,032. The Dow Jones Industrial actually up 0.75% at 42,251. And you have the Russell off about 0.12% at 2,198. Dollar still pretty strong, comparatively speaking, right? We had a high of 110.17 trading right now at 109.90. Crude oil definitely having a moment here, especially with increased restrictions on Russian gas, I believe, into China and India as well. Russia obviously saying we're going to continue with our gas projects, but regardless, it is sending that crude contract up a little bit. Trading right now at up 2.95% at 78.83. Gold not really catching a bid in this market, right? Of course, you have the bond prices going down. You're getting yields continuing to kind of go up a little bit. We'll talk a little bit about that later in the show. You have gold contract off about 1.35%, 2,678. You have copper up about 0.42% at $4.32. Continues to be remarkably strong considering the other metals we look at, which is gold and silver. And silver itself off 3.25% at $30.29. At least on my end, with some of the more like micro caps, small caps that we've been following, just because they've been getting so much attention over the past couple months, that's all gone. I mean, these things are getting slaughtered by. Let's take a look here. Some of the ones we were covering. Of course, you have Seal SQ. That's off 40.68%. You get Wise Key. That is off 13.92%. One of the guys that's been getting a lot of attention has been this Cooler Tech off 13.66%. All these guys are just getting smoked, right? Talking about Quantum even, I think it continues to get eroded today. Look at that. Look at that. Qubit off 27.83% at $6.48. Rigetti, excuse me, off 31.47%, and then IonQ off 14.44% at 27.69. I mean, that is capital destruction right there. The comments that Jensen Huang made, at least regarding Quantum, were kind of compounded by Mark Zuckerberg going on to the Joe Rogan Experience, his podcast, saying they were about 10 years out from Quantum as well. And it's just, it's a tough spot right now. You know, you have concerns about inflation continue to go. You have more people discussing, okay, the potential that we get an interest rate increase, which can kind of mess this up. Obviously, you have everything with chips going on, where you have Joe Biden extending kind of the AI chip restrictions. NVIDIA is obviously upset with that. TSMC is upset with that. You have AVGO to some extent doing okay, comparatively speaking. You're up about 0.12%. You were a little bit higher this morning as well. But, there's this idea that, you're having inflation still, being somewhat elevated. So you get the restrictive policies still somewhat in place. I heard someone arguing that it wasn't really about inflation, but it was more about the strength of the economy and how long that can actually persist, right? It has nothing to do with restrictive policy. And they brought up the JOLTS number on the drop. And I think to that argument, what it really is the Fed does see that as kind of a source, right, of inflation. They can only really affect demand side. They can't really affect supply side and capacity. So, increasing unemployment is extremely important for the Fed, at least at this moment, or at least it has been historically, and they definitely were speaking about that when they started increasing interest rates. So I still think a lot of this is the threat with the inflation, the Fed being worried about that, and the U.S. market still being relatively resilient to some of the control mechanisms the Fed have in place. I don't think that changes anytime soon. I don't see a catalyst for this switching back and we rally to the upside. I think you might get some contraction going forward with things like NVIDIA because of the AI chip restrictions. I think you're going to get a lot of capital expenditure from some of these large hyperscalers that's not going to see immediate return in the near future, right? And that can be catalyst for even further movement to the downside. I mean, you look at Microsoft, right? They're off 0.57%. They're about to dump a bunch of money, and this is a big move, right? I mean, you're at 456 all the way down to 416 right now, just in a month. They're about to dump a bunch of money into building out these data centers, and if the markets are suspect on equities, having a huge capex for this kind of stuff is not necessarily appealing. So, as it stands now, I am in cash. Okay, some of my stocks that I hold, like things like Nebius, which is actually doing quite well today, those are things that I think are financially healthy, and probably in the near term, the companies that are going to get the attention are ones that are financially healthy, right? Maybe no more of this speculative kind of like hyper growth at this moment. I mean, you're seeing stuff, at least in the more speculative like aerospace industry, like Lunar off 6.83%, PL off 4.04%. Not necessarily this is aerospace, but in a way, I guess it is. But Archer off 7.38%, right? So these are stocks that have been doing extraordinarily well at the end of last year because people were very hyped on equity and they're pricing in growth. And while some things like Nebius I do believe are growth stocks to some extent, what differs between companies like Nebius or DCO, even Ducom that we were talking about, is that they have healthy financials, right? And so if equities get any attention in the near term, it's probably going to be things like this. Folks, stay there. We'll be right back with Steve Rhodes, the author of Mastering Probability, right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're gonna change gears here a little bit. Still talking about the markets, of course, but we have a guest. I want you to take a look over at my screen here. I'm taking a look at the Mastering Probability newsletter by Steve Rhodes. Steve Rhodes comes on every Monday to the Tom O'Brien Show. Love having him on. Has very nice and interesting analysis. Additionally, he is the host of the Trader's Edge Show right here, 11 a.m. Eastern Time on TFNN. Steve Rhodes, it is great to have you back. Steve, how was your weekend?
Be with you. Weekend was just beautiful. You know, you're right. I mean, it is a little bit chilly in the morning.
Yeah.
But being a couple hundred miles south of you helps because of good old Lake Okeechobee. It tends to hold that cold weather back. But it was a bit chilly. But just gorgeous days for me. Some of the best gorgeous days for golfing. So I like it. And I haven't gotten out as much as I'd like to. But, I heard you talk about gold earlier.
Yes.
And so that's actually the place that I wanted to start today, if that's okay with you.
I would love to hear it, yes. I was kind of, anticipating maybe gold catching a bid with everything going on right now. But we're not seeing that. I'm curious to see what you're looking at regarding the metal.
Perfect. So let's take a look at the charts. And this is something we don't spend very much time with, but we did just finish the year, 2024. And so we're going to take a look at the yearly charts for gold. Now, this is a continuous contract that we're taking a look at. And the first thing that I want to note on this chart, first, the upper portion is the actual chart data. What's below is a way to measure consecutive moves higher or lower, consecutive higher closes or consecutive lower closes. The lower closes being in red, the dark figures, the black figures being higher closes out there. And that's important to take a look at. But the first thing that I would mention is if we take a look at this arrow, and I've been on the show with you enough that you're familiar with some of my lingo, for example, like a TD9 count pattern. And a TD9 count top or bottom, in this case here we're going to talk about a top. The high of that, and it's something that I teach to subscribers, so if people want to learn this, and they should want to learn that, they can subscribe to Mastering Probability, and I've got a workshop that will teach them, and it's easy to go ahead and understand the pattern. In this case here, in order for a high to form, Jacob, the high must take place on either bar 8, bar 9, or the bar following bar number 9. Now, David White, before he passed away, he and I were working on a project, and some of it dealt with the TD9 count system. And what he was able to identify, what we did, was if we get to a successful bar number 8, meaning that could be the high or low of the pattern, in this case here the high, there was a 90% probability that this would go on and complete the pattern. So in 2011, the bar following bar number, and that certainly worked out in this case here, but it was in 2011 when we got a TD9 count top. And then what we can see here is price move lower. If we go down to the bottom portion of the screen, we had 3 consecutive lower closes. In fact, gold actually moved higher for 11 consecutive years. Higher closer for 11 consecutive years. Things tend to work in 2s to 4, between 2 and 4 out there. So no surprise that there was a 3-year pullback, or at least that it stopped after year 3. And then what transpired after that, we saw one 2-year rally, 1 year to the downside. Don't try to mark that out there. Another 2-year rally, 2 bars to the downside. And then 2024 was a 2-bar rally to the upside. So the question is, was 2024 a top inside of gold? The other thing is we can see that we've got bar number 8 that also completed in 2024. Remember, the high of the pattern can't take place on bars 8, bar 9, or the bar following bar number 9 out there. So we don't know the answer to that question, but it does suggest caution. So before I flip this chart, does this any questions that from what I've said in your mind that I can clarify?
No, that was very followable. I hear you. I'm with you the whole way on this.
Perfect. So now let's go take a look at a monthly time frame chart. And gold formed a monthly sell the D point top in November of 2024. Now I've got the A to B equals C to line, the A to B line. This is the blue line out here. It started with a TD9 count bottom back in July of 2016, it looks like. And then at the top with the TD9 count top. How about that? And so I've drawn in the A to B equals CD pattern out here. Once we get to the 1-to-1 price projection level, what we're looking for there is we're looking for confirmation that it's a top. And for me, the easiest way to confirm that is understand bullish or bearish, in this case here, bearish reversal candles, because that's what tells us the cavalry is ready to try to start moving lower. And that's what we had in November 2024. We had a nice bearish engulfing candle, and that since has led to some lower price. In fact, what we had was we had 2 months to the downside. So December was month number 2. So the question that I would pose here, knowing that things can work in 2s. In fact, if we take a look at the very bottom portion of the chart out here, since November of 2022, all pullbacks before we had some type of rally were in bars of 2, and December was the second bar. So the next question, so on the yearly chart, we're saying question mark, is this a top? That's a much longer term picture, a bigger picture out there. It's something we just kind of keep in the back of our head, and we keep in the back of our head or someplace in our head out there because we're always wondering whether if support levels start to fall, then that starts becoming a little bit more magnified. Does that make sense?
Yes.
So right now, it's just on the shelf out there. But here we had a 2-month move to the downside. So the question would really be, are we getting ready for at least a 1-month rally inside of gold? Let's go take a look at the weekly time frame chart. The weekly time frame chart forms a TD9 count top. Everybody can see that out here. It was bar number 9. And really, since then, it's pretty much led to a sideways type move out here. This green line, which is referred to the oscillator and change line, has acted as a key level of resistance. So what's cool about this is if gold is going to rally, you and I know one thing. Price is going to have to close above that 27.35 level. Now that number, folks, what I just gave you, actually on my chart it says 27.3450. As price moves up and down, that number will move up and down. But you can use that as a guideline. We know, Jacob, that if price closes above that, then it's rally on, and we head back up to the high. So. Yep. Was December the 2-month pullback low out there? Well, this will answer our question for us. Just one simple number, which we'll call probably 27.36, 27.37, something like that. If price closes above that on a weekly time frame, then gold is at least going to go back after its TD9 count top. Any questions before I flip?
No, please continue.
Perfect. So now let's get to the daily time frame. And here in the daily time frame, by the way, today is going to become a TD9 count top. And that says that either the high for this pattern took place on Friday, or it could be tomorrow. We could see a rally tomorrow, and it takes out the high from today, takes out the high from Friday out there. That still would be a valid TD9 count top. But what we can also see out here, and this is really kind of interesting, we can see a wedge pattern, flag pattern. We can see a descending trend line. We can see a rising trend line. Turns out that's a 260-point move out there. Now, what typically unfolds here is when gold breaks either to the upside or to the downside of this wedge out there, we typically get a measured move equal to or greater than what would be 260 points. So it's really worthwhile for us to try to figure out what gold is communicating to us. At this stage here, knowing that we're going to get a confirmed TD9 count top today, we're likely going to see gold pull back to the 2665 level. Or what would be more logical is would pull back to that rising trend line. Make sense?
Yeah, understood.
So that's a daily time frame. Here is all 4 charts put together. So in summary, we got a yearly TD9 top. Well, in summary, I'd say this: we will likely get a TD9 count topping pattern by 2026. Maybe it already came in. The monthly looks like it wants to pull back to its oscillator and change line. That's about 25.95. The weekly's got a TD9 count top with breakout support down at 25.27. That is always a possibility, but that won't come into play unless we see price break through this rising trend line out there. So I'd say more likely than not, gold is going to pull back to 26.65 or that rising trend line. But here's the kicker, and we can come back to this kicker if you'd like. We come back to this break.
Absolutely. Steve, please stay right there, folks. We'll be right back with Steve Rhodes right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live Trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge Show on at 11 a.m. every day that the market is open right here on TFNN. One of the things I want to say before we continue on with Steve is if you have not checked out the Mastering Probability newsletter, now is a fantastic time, especially with all this kind of, basically counter movement in the market. The market definitely gets substantially harder to trade when you enter into this kind of bearish territory. This is what our hosts are here for. If you have never tried out the Mastering Probability newsletter, I strongly recommend doing so, and you can do so risk-free. We have a 30-day money-back guarantee on all of our newsletters, so you can try that without having to fear losing out on any money for whatever reason it doesn't work for you. We, of course, are betting that it will work out. See, before we went to the break, we were looking at gold.
Yeah, and so we're taking a look at gold, and basically our summary was that we should expect or anticipate gold to move lower, maybe even get back towards the 2620 level. However, but, and this is a big but out there, all the charts that you and I were just looking at was charts for gold priced in U.S. dollars. Mm-hmm. But if you're sitting over in Europe, or if you're sitting in Europe, or maybe you're sitting in the U.K., maybe you're sitting in, which is part of Europe, maybe you're sitting in Japan, maybe you're sitting in, some other country, you're thinking in terms of your currencies. And interestingly enough, today, gold made new all-time highs. It made it in terms of euros. It made it in terms of Great British pounds. It made it in terms of Swiss krona. It made it in terms of Swedish francs. It made it in terms of Aussie dollars. Got real close in terms of Chinese yuan out there. Didn't totally get up there. That tells us that we've got buyers that are overseas, and what that should do. So, look, if we get sellers across the board out here, and this works this way for any instrument, then we start to see things moving to the south. But while we're still making new all-time highs today in other currencies out there, the moves lower inside of U.S. dollars, as long as that remains in effect, should be somewhat muted. Does that kind of make logical sense?
It does.
Perfect. So let's do this here. I like to say, let's never stop learning. I mean, I certainly live my day that way. So let's review some of the index charts. I will be a little bit quicker and thorough, but a bit quicker. So as long as price remains, I mentioned the oscillator and change line, and that's really important. This happens to be a monthly time frame chart for the Dow. If we take a look at November of 2023, we can see that price closed above that green oscillator and change line. To sum up, what is the oscillator and change line? It's the difference between the 19 period and 39 period exponential moving average of price out there. But here's what I really want you to know. As a green oscillator and change line tells us the price oscillator is above zero, and those are bullish conditions. When price is above that green line, it tells you that you have a rising price oscillator above zero, and those are real bullish conditions. And the question would be, anytime along the line from November of 2023, we've not had a close below that line. There's never been from a longer term perspective, we've got all kinds of traders here, right? We've got some traders that will use a 10-minute chart, but the majority of our listeners are listeners that are trying to manage their 401k accounts, or trying to understand their intermediate term, maybe swing trading, so you take a look at a daily time frame. Right. But in the bigger picture out here, one would never really want to sell their portfolio unless you saw a close below that line. Right now, as we speak, the Dow is testing that level. Does it matter what it's doing on today? What is today? The 15th, I think?
13th today.
I kind of lose track. It doesn't matter what it is today. It matters what it's going to be next Friday.
Yeah.
So come next Friday, folks, tune into the Trader's Edge show or watch the archive of that. I'm sure we'll be taking a look at that. But right now, price is testing support, and that's what's important for folks to know. Right now, that number is at about 42,284. Again, as price moves up and down, that number will change. So this is a real important thing to look at. If we take a look at the Dow, kind of like we did for gold in a larger perspective, the Dow has rallied. If you look at the lower portion of my screen for 2 consecutive years, remember things kind of tend to move in twos, anywhere between 2 to 4. Right. So it's the potential for a caution. It's a caution sign that's out there. The monthly chart formed a Rhodes Momentum Indicator top. That was in December of 2024. We were just talking about the monthly chart for the Dow. If we were to close below that green oscillator and change line come next Friday, then that's going to suggest that we should pull back further. Pull back further to where? Well, on Friday, on a weekly time frame, the Dow confirmed an A to B equals CD pattern, A, B, CD pattern to the downside. That gets us towards the 40,500 level. Now, that's just a price projection. As price gets down there, should it move down there, what we would be looking for is a bullish reversal candle to go ahead and confirm a bottom. Otherwise, its price target could be all the way down to 39,251 because price is always trying to seek resistance or support, and that would be a support level on the weekly time frame. The daily also has that A to B equals CD pattern, but it's also triggered a Rhodes momentum indicator signal. And if in fact it forms a bullish reversal candle, that would be a signal of a further rally. But that rally, and this is important to take a look at. We talked about the oscillator and change line, Jacob, on the weekly time frame for the Dow. Look at how it can also be used on the daily time frame. Look at how each of our rallies have found resistance at that oscillator and change line. So we do know if there's going to be a change in trend and the market's going to move to the upside, price needs to close above that line. At this moment in time, that reading is at 42,582. Here's the NASDAQ composite. The NASDAQ composite negated a TD9 count top last year, a yearly TD9 count top. Okay, so that would suggest that we might move higher. This too was 2 years to the upside, so it says caution. The weekly has a sell the D point top, but it's still traded above that green oscillator and change line. So before the NASDAQ composite can give us any kind of some type of sellish signal, price would have to close below what's currently printed out at 18,423. Again, that number will change. The weekly chart has a Rhodes momentum indicator top. That's suggesting lower price. If you're saying lower price to where, I would say it would be the daily breakout level. The cool thing about the TD9 count pattern, it provides us where price broke out from objectively as well as where price breaks down from. Here's the yearly NDX 100. What we don't have out here from a yearly standpoint is any kind of a topping signal. We're only in bar number 7 right now. The monthly chart has a Rhodes momentum indicator top. 2417 is going to be its key level of support. That's the monthly oscillator and change line out there. The daily suggesting that we may pull back to the 2436 level. And lastly, I'll leave folks with a potential trade out here. And that is this. We're taking a look at the charts for Apple. What I want to do is just focus on the very right-hand panel. And the very right panel shows us that we formed bar number 8 on Friday. Bar number 9 of a TD9 count is going to go ahead and form today. That says the bottom of this pattern either took place today already or should take place by the end of day tomorrow, with price rallying up towards its oscillator and change line, which is $247. That would be a nice move. That would be a good intraday trade out there. I don't think that bottom is in just yet. And the reason is these show some of the intraday charts out here, and it's only the 15-minute time frame that has given us a bottom signal. Typically, we would see bottom signals on more than just a 15-minute time frame from an intraday perspective if the bottom is going to come in. But we should start to see a bottom inside of Apple today, tomorrow. And at this stage here, I'd say it's more likely tomorrow.
Steve, thank you so much. We'll see you tomorrow morning, 11 a.m. for the Trader's Edge.
Sounds great. Thanks, Jacob, and have a great afternoon.
You too, Steve. Folks, stay right there. We'll be right back after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Sorry, I stopped to get some water during the break and forgot to put the mic back on. This is Jacob Shoup. You are watching the Tom O'Brien Show. I was just joined by Steve Rhodes. Again, Steve hosts the Trader's Edge. Live at 11 a.m. Eastern Time every day that the market is open right here on TFNN. If you're in the Discord, welcome. So good to have you. If you're on YouTube, please consider giving this stream a like. Please consider subscribing to our channel. It helps us out immensely. We want to continue to bring you the analysis that we bring you currently. Again, this is the Mastering Probability newsletter. That is Steve's newsletter. For anyone who's just kind of tuning in, I know around these times when you get some very strong volatility or specific directional movement in the market, you get a lot of people who have a renewed interest in the market in general. Now is a great time to try out these newsletters. And one of the things I want to say as well, if you're a new listener, and I know we have a few of those, check out these newsletters. You can do it risk-free, okay? We have a 30-day money-back guarantee for every newsletter if it is your first time subscribing. So if for whatever reason it doesn't work out, you get your money back, right? We bet it is going to work out. And if you kind of missed Steve's analysis or want to go back over it, you can go to Tiger Financial News Network on YouTube at the end of programming today. And of course, check out that segment. Our producer is hard at work getting that clip for you all as it speak. He was talking about gold. I thought very interesting kind of analysis. It seems to me like really what I think is kind of going on is everyone's just going into cash because you're getting, egresses from equity, from bonds. None of the metals are getting it right. I'm looking today, the stuff that's getting some kind of attention at all is now back to your biotech stocks, your pharmaceutical stocks. One of the things that I thought was very interesting, give me a second here, was Ackman discussing, I know we never spoke about it, even though I had brought it up, but discussing privatizing Fannie Mae. So, which is crazy in and of itself because it's still in trillion-dollar oopsie jail. But it's trading up 4.28% at 548. I mean, we were talking about it, and Ackman was talking about it around this 204 level. If it goes private, I think it loses some of the support, right? And I have to look more into kind of how this operates currently. I had some idea before. Obviously, 2008. Now, of course, I learned that after 2008 because I was a child then. But I don't know how taking this private necessarily benefits this group at all. Regardless, Bill Ackman has done a fantastic job trumping up support for this. And by the way, it's not even a given, right? I mean, he's just suggesting that Trump could privatize Fannie Mae. I don't, I mean, obviously, if you got in when he was talking about it, you would have doubled your money nearly. But I think there's a lot of implications with taking something like Fannie Mae private technically. We can discuss that a little bit more this week, but just be cautious when you do things like this, right? And these are all OTC shares right now, right? Again, the thing is essentially in conservatorship. That's what he wants it to get it out of. I think they have total assets of like 3 trillion or something like that. It is one of the largest companies globally. 4.3 trillion, in assets. It's the largest company in the United States and 5th largest in the world. But I am under the impression, and I got to read some more on this, that if you take this thing private, it loses some of the benefits that it gets from being in conservatorship. So just something to keep in mind. I just saw it again being spoken about today. We'll probably take a deeper dive later this week in it. Let's take a look at some of the other equities that are actually doing okay. Take a look at Nebius, up 7.78% today at 35.76, trading at a market cap of 7.1 billion. If you've listened to me on this show at all, you know I am rooting for this stock in a major way. About $2 billion in cash, no debt at all. It used to be Yandex. They divested out of Russia, are now headquartered in the Netherlands. Spoken out against Russia. The sanctions, and me saying this is the sanctions, aren't necessarily going to hit them the way they would if they were still invested within Russia. Projecting basically an ARR of about 500 million to 1 billion. They're a data center company. They're doing NVIDIA GPU clusters. They're going to rent out compute. Given its kind of competitors, they should be really valued around $60. It's at $35.18 right now. Its biggest competitor makes double the revenue, but trades at like 5 times its market cap. And so if you kind of follow along with that kind of logic, you know, Nebius should be getting some more attention. They have plenty of room to grow. They're expanding in the U.S. right now, and then of course in Europe as well, which I think is. Although Europe is not obviously as strong of an economic powerhouse as America is, there's still plenty of demand for GPU, like basically compute rent out there. And then definitely there's room for competition in the US for that. So I like Nebius, up 8.18% today. You know, no particular news on it, which makes me think these are just people trying to get in money, anticipating the same kind of growth that I'm anticipating with it. Of course, you had Citron cover it a little while ago. That kind of lost steam. And always be aware of those kind of reports in general because you don't know why they're publishing that information. It could be they're trapped in some capacity and they want some extra liquidity. It could be they actually do genuinely care about it and they want it to go up. But point is, you should always do your due diligence on it. Strongly recommend the Guy Arcady, who's the CEO of Nebius. Very competent. Obviously ran Yandex to very high levels. Unfortunately, the war between Russia and Ukraine kind of shot Yandex dreams in the foot there, but we are back with Nebius, and again, they are doing GPU compute. Let's see what else we can take a look at as well, kind of just in this realm. Taking a look at Arrowhead Pharmaceutical, that's ARWR. This is kind of interesting. What they're doing right now, and this has gotten a lot of analyst attention, they are making a compound that is supposed to, in theory, be used in concert or in competition with these GLP-1 drugs, right? So the weight loss industry is massive. Of course, we've been covering HIMSS a little bit with them doing generic semaglutide. And so what Arrow is doing, and I believe they're in phase 1 right now, but they're doing something called an INHBE inhibitor, gene inhibitor, that basically attaches to certain mRNA expressions coming from the liver. They're testing it right now. I think it's in phase 1, if I remember correctly, for this, to see if it's effective, and then they will do it in concert with tirzepatide to see if there's any kind of compounded therapeutic effect. Something I'm definitely following. Market cap of $2.3 billion right now. The only reason why this is kind of interesting to me is because I think that there is room for other compounds besides GLP-1 in obesity management. And then additionally, this has just been getting a lot of attention from much larger companies, which I find somewhat interesting. We can go on a little bit talking in the same kind of data center space, which I'm very big on, and I think is probably the thing that this market can hinge on. take a look at Navitas Semiconductor. When we get back from the break, we'll talk about these guys just a little bit, what they do, and why they might be a little bit interesting to do some DD on. So stay right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're just looking at Navitas a little bit before we went to the break. I do not own this equity at all, and there are some things that make me a little bit nervous about it. What is interesting about them is their investment in gallium nitride and silicon carbide, right? So we've been speaking a lot about the power demand that data centers are going to have, especially with the increase of AI. I mean, just let alone data centers themselves. If AI never existed, these LLMs never existed, it would be still increasing. But with this added kind of weight on it, you start running into serious problems. So we've discussed that as well. Jensen Huang, of course, said something similar. You can't add more transistors on. You're reaching kind of this cap, at least with silicon. And so things need to become a little bit more efficient. This is kind of the idea with silicon carbide and gallium nitride. Now, what I would say that makes me not super like this company right now at this price point, right? You have a 550 million market cap. You know, it doesn't seem like you're getting any insane growth kind of quarter over quarter, year over year. Of course, I still think they're positioned all right. So I mean, for instance, you have $98 million in cash and cash equivalents. Don't really have any debt at all. Your asset to liability ratio is phenomenal for this company. Net revenues are good for the 3 months. In September 30th, you're at 21.6 million. But you're continuing to kind of lose, right? The same amount year over year and quarter over quarter. So there doesn't seem to be any, improvement in that realm, which you need to see improve. You either need sales to increase exponentially, or you need that profitability to improve to make 551 million valid, right? And I would say gallium nitride is not necessarily maybe something that everyone talks about. I think photonics might be a little bit more appealing, but we can discuss this throughout the week and kind of see how this market shakes out regardless. Folks, thank you so much for joining me. We'll be back tomorrow morning, 9 a.m. for the morning market kickoff with Tommy O'Brien. Take care. See you then.
Building